Hey, what's going on there, traders? It's Chris at Verillo Trading. Hope you guys are having a fantastic day today. So today is Tuesday, June 14th, 2022. Tomorrow there is a central bank meeting. And today was a day where we exited a trade. And actually, I think this trade turned out to be probably the biggest trade we've ever taken in a live account before. So it's pretty interesting. So I'll share it with you guys, and I hope you guys enjoy the video. We're going to talk about a trade that was a bigger picture idea on crude oil, and turned out to play out well. We stuck to our plan, and we got filled on our entry. We got filled on our target, and we stuck through a bit of pain. We sat through a bit of pain at some points, but really it wasn't much. And overall, the trade worked out well, and that's it. So we're going to talk about the risk management plan, the sentiment behind it, the price action, and all of it combined. So, guys, if you enjoy this content, let me know down below, and, press the like button and press the first link in the description to support the channel. Cheers. So I guess the first thing we can do is, well, just show the entries. There's the entry to the trade right there. And there's the exit of the trade right there. And I know that looks really crazy, right? It looks literally like nuts, like absolutely freaking bonkers nuts. So I'm going to prove you guys that this is a live account to start with. And of course, you guys already know, like, I'm not one of these guys that posts these fucking MetaTrader 5, profit statements and whatever. So I'll just show you guys first. So if you go to global settings, data trade server settings, you can see here that I'm connected to Teton, CME order routing. My clearing firm is Ironbeam, okay? So right there, that should be enough proof. And also the fact that trade simulation mode is not turned on, because if it was, then those order fills would not even be showing on the chart, okay? So I'll just take that off again. And I guess I can also show you the trade activity log, which will be on the other screen, and I will block out the account number just to show you guys. So I'll just get that out of the way first to show you guys. So here's the trade activity log. Here's the trade, the time of the entry, the time of the exit, one contract, total profit on the trade, 556 ticks. And $556 because it's $1 a tick. We took 146 ticks of heat this morning, and we exited the trade today at 3:16 p.m. Okay, and there's really not much else other than the trade duration of the trade was 26 hours, and so we held it overnight. And that's going to be it. So now I can explain to you guys my idea behind the trade, and I guess why I picked certain spots to enter and exit the trade, and just overall how I planned it and how I adapted to it, and made the decision to kind of let things follow through, and went along with it. Okay, so this was an example of a good trade, a trade that worked out, and actually it was probably the biggest trade I ever took before. So many of you guys, well, I hope you guys watched my video on crude oil over the weekend. I did post a video about my analysis on crude oil. I did post some sort of an idea about crude oil, and I guess this trade was like the first trade regarding that analysis that I had made. Now, right now, the trade is over. There's this trade, it was like, I believe that this trade that I took is a trade that doesn't come around very often. It's a trade that comes around once, maybe a few times a year at most, I think. And it was a trade that was involving sentiment combined with order flow, seeing the order flow and seeing the price action take place in conjunction with the sentiment combined, I guess. And it was like a puzzle that was, that pieced itself together, and I was able to kind of sit there and sort of make sense of it, and also have enough balls to act upon it and actually place a trade and manage my risk, and place a bet based upon that idea, okay? So I'll explain to you guys, how I thought of that and all of everything and how it worked out. So you guys should go watch the video first, the analysis video where I was talking about it. So basically, I left that video saying that I was looking for a short entry. I just didn't know where yet. So I continued to look at the chart, and maybe I should show you guys the daily chart too, but the daily chart is not, that helpful. But basically at the time of me recording my analysis, we were like here. We were basically right here on June 10th. So we had seen a bit of supply, continue to enter the market, and really the market was still sort of in this trading range around these 120s. It had sold off to around, about 118, 117 and a half, and then, kind of reclaimed this area and was going back and forth. But given the bigger sentiment and everything, and my idea on the market, I was expecting these sellers not to really let up that easily. I was expecting them to kind of continue sticking around and probably see a bit more institutional, participation on the sell side in certain areas, right? So that's sort of the idea that I had. Now then I went over to the chart and I said, okay, well, if I was going to think that way and I was going to look to enter a short trade, where am I going to look to enter? Okay, so it all depends. Generally speaking, you know, I'm thinking from the mindset of sell the rips, sell the rallies, rather than, you know, being an aggressive short, because it just didn't feel like that was the right way to trade this. You know, the market, especially in, you know, I guess you could say bear market or trending down market from the highs, you want to be selling the rips and then riding out that slow fade to the downside. And that's a tricky trade to kind of explain as well, because it's almost counterintuitive, right? Because a lot of people want the easy money, but actually, believe it or not, the best trades are sometimes the hardest to hold. So I think that's why this trade is a pretty good example as well. So I guess we could start with the entry of the trade. So basically, this is where the market opened on Sunday, and this is where it closed on Friday. It opened here on Sunday, sold off towards the lower end of the trading range, and then just consolidated overnight and around this area and accumulated around these 118s. And then early in the morning, well, I guess you could say it was around 10 o'clock or so, we had a sell-off followed by a really big rally. And this was one of those steamroller rallies, like one of these, you know, rallies that just goes and it just doesn't stop. And I was just sitting there watching it. I was watching it, right? And I know, you know, based upon, you know, my understanding and my knowledge about the structure of this market up until that point, that I didn't want to be selling any rallies, especially going into this 120, going into 121. Maybe if you start getting into these 122s, 23s, you know, that's when you start to think about, from the perspective of an institutional trader or whoever is involved, these big, you know, big money oil players, where are these guys going to be selling the rally? Well, so I'm starting to say, okay, probably around these 122s. There was a big high node right here. Okay, and we did, I guess, trade through that. The high node, well, is still there on the chart. Maybe it's being kind of like covered by that, but that's not a big deal. So that big high node was there around 121 and 75s. What I was really looking for, you know, I guess from an institutional standpoint, I'm thinking, okay, probably if you get a flush through there, that'd be a good area to try to get short off of, anticipating that it would reclaim it and then just kind of chop through that. So you'd at least get an entry with some sort of edge from there. So that's kind of what I was thinking. I thought 122 and 45 and 50 cents is a little too high, you know, just considering, and I'm just judging based on the volume profile at the time that I was watching it. So I placed my entry a little lower than that. And my entry was exactly at a price of 122 and 22 cents. So I want to reiterate. The first thing was I'm looking to sell rallies. Second thing is the general area I'm looking to sell a rally is probably around these, you know, going through that profile around 120, 175, around 22 general area. But I wasn't exactly sure of where, right? Because you don't want to place your order too far, too close, etc. And at the end of the day, it doesn't really matter because, you know, it's a longer term, bigger picture approach anyway. So it's kind of like a feeler, right? You're putting a feeler on the market. So it's not the end of the world. For me, it wasn't the end of the world if the market would run through my entry, continue 100 ticks against me, because what that does is it gives me information about if I'm reading the market correctly, okay? And so far, up until this point, I had been reading the market very well and I was confident in my read. So I went ahead and placed the order, and I had the order in at 122 and 22. And I also placed that order there. There's another reason why I placed the order there. Upon the open of Globex, which was here, I looked at the order book for the July contract of crude oil, and I looked across the order book on the offer side, and I wanted to see if there was any size positioned anywhere. And I noticed there was some size right at 122.22. And it's also a psychological number, right? Because it's 1, 2, 2, 2, 2. You guys could say, okay, whatever, maybe it is, maybe it isn't. I think it is. I think it's a psychological number, or it's a number. It's like a numbers number. I don't know how to explain it. It's a fancy number, 1 and then 4 2s in a row type of thing, right? So I had my order there. That was it. I placed it. I joined the 100 lot offer, right? So I said, okay, well, if there's 100 lot trader going to place his offer there, you know what? I'll join him. I think he's probably smart. He's got his order in a pretty smart place. So I'm going to join him. So I placed my offer there and I went to sleep. And nothing happened. I left it there all morning, and then next morning comes and the market rips down and then starts rallying slowly. I wasn't doing much on this day either. I was taking it easy. I was a little under the weather. I was in the other room playing guitar, shredding away, and I guess come 1 p.m. I come back to the screen and I see I'm filled in an order here, and I'm already in the money around 60, 70 ticks because it was already down here or something at the time I was filled. I mean, at the time I saw it. So that was interesting, right? So I see that, I'm like, okay, well, turns out I got a good price. I picked a good area, right? That did end up being the high of the day. And, after that, I just continued to watch and basically sit pretty in that trade. I wasn't in a rush to cut it because I know that this trade is a bigger approach. It's a bigger idea to begin with. So I was saying to myself, okay, well, this is interesting. I can tell that, I was right on the initial entry, but there's no guarantee that this trade will still be good tomorrow. But even if that is the case, I still decided to hold it overnight because, of course, it's a bigger picture idea. So the low of this pullback was set here in the afternoon. Then we just kind of consolidated, and then overnight we saw more consolidation. This consolidation here in this area of 121.60 to 121.90 is very important also, because this consolidation here is just very important regarding the sentiment of how the market traded overnight. So let's go to this morning here. So I guess, when you sleep and you're in a trade, I guess it's a little stressful, right? But this is where we can discuss the risk management plan behind the trade. With this trade in particular, I was willing to risk a total gross amount of around $500. Okay. And that means that I could exit the trade and potentially re-enter it a few times if I needed to. Maybe for about $100, $200 a pop, and re-enter it. And that was kind of my plan. My plan was that I wanted to structure it in that way. So I was going to say, you know what, I'll give myself $500 to land a short on crude. If I can't land it after that, I'm done, right? So what that means is that I'm willing to work within a range of, a few hundred ticks at a time, and see how it plays out. Basically feel it out, feel out the sentiment, feel out my bias in the sentiment and the price action all sort of put together like I was doing originally, right? So the market is moving up this morning. It's going against me, right? And we're trading up to these 1, 2, 3s. Now, I want to say, I know this may sound like hindsight, but I did say this in the back of my mind. I said, if the market does go against me tomorrow or the next day, I think that the next area that it will get caught up at, the next psychological number, and I promise you guys, I thought of this, is a price of 123.45 cents. And the only reason that I said that was because that is the next sort of psychological number or kind of funny number I could think of in crude oil that has the potential to, beat anything actually. And there is an actual resistance higher up at 124.94. But again, if I go back and look at the picture from March, my main idea, especially I mentioned it on Sunday as well, was that I really wasn't expecting crude to kind of get past this 124 here, this 124 node, because this volume here, I guess I could try to explain it, but what it signals to me is traders, a whole bunch of volume here with a big high node holding it, of volume that has been, I guess, trapped. And then the market will naturally resist this area depending on other circumstances as well. And that's kind of how I viewed this ledge here. That's kind of how I was able to kind of perceive and plan around this. Maybe some of you can also, try to better word what it is I mean by this ledge here. But basically, I was expecting this ledge to be resistant. So if I were to start to see more acceptance of this ledge and a hold of the ledge, that really for me is a signal that, okay, now you're kind of wrong because this thing looks like it's going to 126 and then 128, okay? But that ledge being still in play for me, my entry at 120.22 is not that bad still. So that was one thing that was still in my favor this morning as well. And of course, the other thing was the psychological number of 1, 2, 3, 4, 5. And it's really funny because if you do look at, where it accumulated, where pretty much the most volume traded, I mean, there's 2 of them, right? But, let's be honest, guys, look, 1, 2, 3, 4, 5, that's pretty much where it stopped. Psychological number, right? And of course, you got to get some overshoot. If you do look at the high of the day, another thing is, 1, 2, 3, 68, but really, one tick away from 68 is 69. That's another psychological number right there. And yeah, so it's like this stuff, just like I see it all the time in so many markets. I've seen it in the NASDAQ too, where you get like 420, 69 or that kind of stuff. A lot of psychological numbers, even numbers, repeated numbers, 666, 222, 777, all that stuff. It happens quite frequently, okay? So the market, I guess, accumulated in this area and it was going back and forth, back and forth, back and forth. And I'm just chilling. I'm sitting pretty, right? As long as the thing is not really pushing 124s, I'm all right. It's not the end of the world. I'm offside 100 ticks. Like I said, I'm willing to risk $500. I'm not going to let it go more than probably 200 against me on a one lot. So, at the end of the day, if it's wrong, it's wrong. It's not the end of the world. $200, I can make that in a couple of days. It's not the end of the world, right? So it's a very important that when you enter these types of trades, like some traders, they're going balls deep, full risk, full leverage. But it's very important that when you take a bigger picture idea, I think at least, is that you have to be totally in control of the trade. You have to be totally in control of the risk behind the trade and your idea behind the trade, your plan behind the trade and everything. Because if you're over leveraged, you're just going to be overthinking it. You're just going to be thinking of too many things. You're going to be overreacting to the price action. Your emotions are going to take control of you because you're a human being at the end of the day, okay? Being in a small position size relative to my risk tolerance and all that, for me, was helpful, okay? And also, small position size relative to my risk tolerance because the risk was predefined. I knew exactly how much I was risking, how much I wanted to risk, and I had a bigger picture idea on the trade. All of this helped contribute to my ability to stay in the trade longer and not panic out of it, okay? So, soon after that, the market started to consolidate, earlier into today's session here, and we started to see more of a pullback, more of a pullback, more of a pullback, and then it bounced off of this high node. Now, this is where the price action started to get interesting, right? Because you have this big high noded area. And one thing I know about high nodes and price action is that normally when you see a bounce off of a high node or an initial sort of rejection off of a high node, normally it indicates to you that that's pretty weak. That market is a little bit weak. Now, it's tricky to say, but I thought, seeing that bounce off of this high node here really indicated to me that the market probably had some more downside. Basically, what I meant is it's not a red flag. It's actually a green flag that the market was just bouncing off that high node a few times. And it was poor lowing out right around there. What I mean by poor low is it was just sitting there bouncing, and it bounced at least, for about an hour there because these are 15-minute bars. So it bounced off of that for about an hour, and then, it finally flushed. And when it flushed, well, boy, did it flush. It went all the way down to yesterday's overnight range and beyond. Now, at this point, the price action also starts to get very interesting. Now, I think at this point is where we can start to discuss my target for the trade. And the target was pre-planned as well upon the entry of the trade. And, the target was not super rigid to the point where I knew exactly, the exact price and the exact area because, the markets are not rigid and, so many things can happen in the span of a few hours, a few days that you really don't know what's going to happen. Like basically it depends on how fast it gets there and the sentiment and all of that, that has the potential to change how I will manage the trade or potentially adjust the exit or adjust the plan if I need to, right? But up until this point, there was nothing that really told me to adjust the plan. So I guess we can talk about the target. Basically, I guess daily chart was a good one. So there on the daily chart, we have this area, which was, in my opinion, support. 117 and 63 on the daily chart is a daily area of demand in the short term, right? Because you had it here. The market tried to close lower, it couldn't, it rejected it, and then we actually came down again in the Globex the other day, yesterday, and rejected it again into a big old rally. And here we are again trading there. So for me, the plan for this was, well, I'm gonna probably look to get paid upon a break of this area. I mean, if it breaks that area, like I'm gonna want to get paid. Like I'm not just gonna let that come all the way back. But then the other thing is that it also depends on how long it takes to get there. I was thinking, well, if it takes all the way through the crude oil inventory report on Wednesday and it goes all the way through the Fed, then I think the trade has a lot more potential follow through to it. But the thing is that's really risky because you're holding into big unknown events, okay? And then the second scenario is if it gets there really fast, the faster it takes to get there, I'm gonna be trailing my open profits into that area. So I continued to watch throughout the day today, and the market kept on selling off. And I guess the price action also suggested that this market was really bearish. And we had a couple of these 100 tick rallies, which really were really crazy to watch in the moment. And during those 100 tick rallies, again, because it's a bigger picture idea, I wasn't panicking. I wasn't thinking, well, okay, this is going to reverse. I'm going to reverse my trade now. No, I wasn't thinking of that at all because I still have a bigger picture idea intact here. And it was just interesting to watch that price action. So basically what happened was the market went straight to the target very fast. And what my plan was is that as soon as it breaks this low here, this 117 and 47, I expect some sort of a capitulation. Sorry, I'm on the wrong screen there. Through this low noted area here, as we break through this low, which is also right next to this low, which is also right next to that low, sort of 3 in a row idea here. And I expect to see some sort of a capitulation through this low noted area here. So my plan was basically, okay, I want to see how this price is trading once we start breaking that. What's interesting is that when we actually got down there, it stopped maybe 3 ticks before the low, and then it rallied, I think, all the way back to 118. It rallied another 50 ticks or so all the way back to 118, and then it started to chop its way back down slowly, and then it capitulated finally. And as it was capitulating, that was when I was really actively watching it. And I had a profit target in the market at a price of 116 and 66 cents. And I partially put it at that price because it's a psychological number, because it's 116 and 66. So it's basically 666, right? And the number of the beast, which is, I guess maybe part of me just wanted to say I got filled at that price and just like show it off, But I guess 116 and 69 would have been just as fine. But I guess 666 was cooler, right? So, that's just fine. So I had the order right there, and it was a limit order. But what I actually did in that moment was, as it was capitulating, it was maybe around 25 ticks away from my limit buy order, which had been set previously. And in that moment, what I did was I submitted a buy stop order, maybe 20 ticks above the price. And that order was basically to protect it in case we got an instant reversal. I want it to be stopped out, obviously, for a win. Actually, it just went straight for my target, and it capitulated right to the target. And then that stop order that I had placed was canceled. But I did place a stop order in that moment. And the stop order was basically saying, all right, I'm locking in the profit. Now, if you guys want to see exactly how I did that, I guess I could kind of give you an example. But, basically, the market was down here, and I was more zoomed in. I was like, zoomed in like this. And the market was coming down, trading. My limit buy order was there, waiting. And I probably submitted a buy stop order right around here, 116 and 90, 116 and 80, and something like that. And I was willing to, adjust it or pull it down if the market was going to come like a couple ticks shy of my order, or just like, go and then start reversing. I'm out of that. I'm not going to let this reverse back 117, because I know that this has the potential to be a bigger capitulation. And these types of capitulations, especially breaking through a low like that, or 3 low structures in a row, they have the potential to reverse and, reclaim the entire thing. And I'm not going to leave that on the table, right? Because, I've been trading for enough time that I know that can happen, right? So basically, I knew when was the moment where I needed to be, managing it by hand a bit, so that's what I did. And I ended up getting lucky, and I got filled on the target instead. And then my other order was canceled, okay? So I guess we can also talk about now some of the price action that led up to this capitulation, which was pretty crazy. I mean, when you think of it, the market was trading up at 123s today, and we actually traded as low as 116, and 62 was the absolute low of that. So if we zoom in here, I mean, look at this. So once the market, went through this high node here, it capitulated, all the way from 121.80s all the way down to 120s pretty fast in a matter of around 15-20 minutes. And right after that, followed by a 100 tick rally all the way through back up to 121 and something. And one thing I know about downtrends or strong trends, and I do apologize for all these red lines on the chart. That's because I have the improper setting for this volume by price. This setting for peaks and valleys, I'll just, fix that. I'll put it at 12, there we go. I reduce some of them. That's not the end of the world. But if there's anything I know about bear trends, is that sometimes they have really, really strong and crazy rallies. And really scary rallies too. I mean, like if you're just sitting there watching every tick, like 100 tick rally against you is gonna freak you out, right? So I was watching, right? I was like, just keeping an eye on it, right? And it was just really crazy to watch, right? You see a 100 tick rally off the low, it flushes through 120, then we're right back at 120 and 20 cents. Hit that thing, and then it starts chopping back and forth. Pretty soon, you know it, we're hitting new lows again. It's crazy, right? I've seen that in many downtrends before in the NASDAQ and the S&P as well. So another one was actually right here. So the second leg down, we sold off all the way down to around 119 and 20 cents, or 119 and something, okay? Followed by yet again another 100 tick rally up to 120 and 20. This rally though, again, rallied up really strongly, and then it started to fade down again another time pretty soon, making new lows. It took its time though, but again, really crazy to watch those 100 tick rallies. And then after that, we started to see finally some volume hit the market there at those 118s and something. And I'm looking at this chart now, and it's sitting over here, and I'm saying, well, it's either going to sit here and close here, and I'm going to hold it till tomorrow, and I'm going to sit through more chop, or we have a chance for a greater capitulation in the short term, in which case, if we do see that, I want to be getting paid on that. So I want to really emphasize the timing factor associated with the exit on this. Like, I basically said, if it's going to happen now, if we test these 117 halves now before the end of the day, I'm going to get out of this, because I think that this is a crazy move down. And I think that if it does go there, it's probably going to bounce from there, right? So I was kind of thinking of the different scenarios that could happen. So one scenario for me was we just, sit here and chop here, and maybe in overnight trading, we go down. I was thinking of it from the perspective of an options trader, as well as traders who are trying to gamble on these options overnight. Like, some of these guys are trading like US oil options, and maybe they're thinking, okay, I'm going to buy these calls and hold them overnight. They get a few ticks in their favor, and then they wake up the next day and they're offside in the market gaps down, right? So that was one scenario I was considering, a gap down open tomorrow. I was also considering a scenario where it tries to go for that 117 half, and then it just poor lows out right on the low, and then it just chops a number of times, and then I end up holding it until the next day as well. That was another scenario that I was considering. And I guess, luck was in my favor, and the best scenario possible played out, which is that I just went for that capitulation, and I was ready to manage the trade in that instant and get the hell out. I also had a target waiting there, but I was also ready to manage it by hand as it was going in my favor down. And well, pretty crazy, right? It's pretty insane. So that's the way it played out. I mean, like, some people will look at that and be like, whoa, that literally looks like you like literally put the marker there, like you inputted it there, right? But no, actually that's where I traded at. So, I guess it happens that way sometimes. The market gives what the market gives. You got to take what it gives, and that's it, guys. So as you guys know, I don't really post a lot of videos posting trades, but I think this one was really an exception. So if you enjoyed it, let me know down below, guys. And hope to see you guys in the next video. Take care. Ciao.